The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
It might seem like a quiet market, but nonetheless, there's still a lot going on. And joining us to discuss it is none other than Michael Sonnenshein. He's CEO of Grayscale Investments, which, by the way, is a sister company of CoinDesk. We both have the same parent. So they have last I checked, it's about, what, $25 billion under management?
That's exactly right. Good morning, guys. Great to be here. Thanks for having me.
Yeah,
my math isn't so bad after all.
Davos bells ringing too.
Yes, coming to you live from the World Economic Forum in Davos, Switzerland.
Yeah, you know, I want to ask you what you're talking about over in Davos, but before we get into that, a little bit about some color that we're seeing. You know, like I said, it's been a rough couple of days for the tech sector, and Bitcoin and other cryptos seem to be going together with tech over the past several weeks, if not months. So kind of, step back a little bit. Obviously, you have huge crypto exposure, but, what's going on? What's your outlook? Is it that Bitcoin and other crypto are being pummeled, if you will, by the tech sector, or is it uniquely just crypto?
I think across asset classes, you've seen a lot of selling pressure and a lot of weakness over the last few weeks as rates have risen in the US market. You've seen volatility across a variety of asset classes, and whether it's tech, crypto, or really anything, I can't really think of many things that have been well sheltered from this recent pullback. There have also been, certain events like Terra and others that have led to additional selling pressure in crypto specifically. But I think that in the near term, we will find our footing, and ultimately we'll see some rebounds in prices.
So that the Terra debacle, though, was kind of precipitated by this situation. It seems, at least, if you step back, 30,000 feet or whatever, it seems that this was sort of precipitated by Fed action and this idea that maybe there won't be as much demand for Luna, let's say. And that seemed to, so it's sort of like feeding one into the other. Do you think that that's a continuous risk that could happen in crypto, where one coin or one stable coin particularly, and as you know, that's the backbone of all this. If there's a problem with that, it could hurt the whole industry.
What we're really hearing from investors right now is they are reiterating, certainly the role that stablecoins play in the crypto ecosystem and their importance. We're not seeing investors really do anything at the moment other than really take, to your point, a step back and really start evaluating the various stablecoins that they're involved in that do help them to, facilitate a lot of the trading and investment that they have in the crypto ecosystem. A lot of investors are telling us they're focusing on items like stablecoin governance, supply, collateral, and over time, really ensuring that the stablecoins they are involved with are in fact functioning the way that they're designed to do so.
So there's been a lot of talk recently, you just said, of the correlation between crypto markets and the stock market. And this is kind of correlations that we've never really seen before, this level of correlation. And I was wondering, since you're kind of at the center of the action, if you could break down for us exactly why this correlation is happening. There's a bunch of different theories out there. One is that because of the role of institutional investors, they're kind of, that they're the ones who are sort of leading the charge in 2021. Now they're sort of like leading the downside. But I'm curious if you could break down why crypto is so closely tracking the stock market, because as we know, it's not really supposed to, at least theoretically.
I think it's a great question, Emily. I think that for a lot of investors, it's a little bit too early to say. Again, I do think that there is a little bit of a liquidity crunch that's happening across asset classes at the moment, in that although a lot of asset classes have converged and demonstrated selling pressure and some weakness, that if we pull back and look at a longer term time horizon, we are in fact seeing that crypto and Bitcoin in particular is uncorrelated generally with other asset classes in the market overall. So investors continue to share with us that they do look at these assets as an element that can help diversify their portfolios, help it weather market cycles more generally. But I do think it's a little bit too early to say in these types of environments why some of these assets are converging and whether there's causation or correlation amongst them.
So recently, Grayscale unveiled their first ETF in Europe, and now you're in Davos. So I'm wondering, while Europe is weighing in on a MiCA legislation, which will be a regulatory framework for crypto assets, what is the mood in Davos? Are there some circles that are really for cryptocurrencies? Is it starting to make its mark? Or by contrast, are you seeing a lot of doubt amid this bear market and this recent collapse of Terra Luna?
Well, there's no question that cryptocurrency regulation are some of the largest topics being spoken about at Davos. What the Grayscale team is focused on, to your point about launching in the European market, is really continuing to expand our global footprint. Earlier this year, we launched the Grayscale Future of Finance ETF in the US on the New York Stock Exchange, really in an effort to open up a new category of thematic investing focused on the digital economy. And thinking about the European market and where investors are in terms of their utilization, not only of ETFs, but also thematic ETFs, it does lag behind the US. And we felt that there is a compelling opportunity to bring, again, an entirely new category to European investors, and now have launched the Grayscale Future of Finance UCITS ETF across London, Frankfurt, and Milan.
Michael, just looking forward, what is it going to take to sort of get us out of this slump? You just mentioned this correlation. Is it going to just have to be sort of like a global macro factor, something that pulls the stock market up? Or what are just some of the indicators that you're looking at, knowing that nobody has a crystal ball, that are important for kind of bringing the market back and bringing prices back?
I certainly don't have a crystal ball. What I will tell you is that, a lot of investors are sharing, an increased conviction in crypto as a diversifying asset, and certainly one that can help their portfolios weather these types of market cycles. I do think that many investors are sharing with us that this pullback in prices is something opportunistically that they're thinking about as they're averaging down on positions, or perhaps taking new positions entirely. Over a longer time horizon, we are seeing that the crypto market does tend to have these cycles where prices break out to reach all time highs again, find a time when they correct and form new bases before they continue to move along the continuum for investors. That being said, the amount of excitement and fervor that there is around crypto investing at the moment, whether that's because there's philosophical proclivities amongst investors, or they're getting excited by development activity, these are all the kinds of catalysts that are helping to get crypto into the hands of just millions upon millions of people. And I believe at the moment, we all do have to remind ourselves it is still early days. I think the latest count is that still less than 2% of the world owns Bitcoin, just as an example. So it's early days, and I do think that markets will continue to find their footing.
The Grayscale Bitcoin Trust has been trading at a discount for several months now, and I'm wondering, what are you hearing from investors? Are they concerned? And I know that you're trying to convert it to Bitcoin spot ETFs, so any further advancements or updates on that?
Yeah, Grayscale Bitcoin Trust, ticker GBTC, is well into its 240-day statutory review period with the Securities and Exchange Commission to convert to an ETF, and if approved, would transition to the New York Stock Exchange. A lot of investors have been showing their support for this initiative as well. Part of that process is that investors have the ability to advocate for the conversion to an ETF by writing into the SEC. So we've actually created a comment campaign at grayscale.com/comment, so that investors can voice their concerns, can voice for themselves why the SEC should take an accommodative approach and approve the conversion to an ETF itself. I think as investors are trying to navigate their crypto exposure in Bitcoin specifically, they continue to find compelling opportunities to invest in GBTC because it does give them the ability to purchase Bitcoin at a discount to spot versus putting that same capital into the spot market. And if you have the right time horizon for that, I think for a lot of investors, the risk-reward payoff remains highly compelling.
Michael, I'm wondering if you could address some rumors in the rumor mill on this. One, whether or not there's so much optimism out there that a Bitcoin spot ETF will be approved that, Rockefeller Center has been booked out to celebrate it. And two, whether or not if it fails, that some institutional investors have threatened or thought about launching a lawsuit against Grayscale.
So, news to me, Christine. I don't know about Rockefeller Center. What I can share with you is that at Grayscale, the entire organization, every single Grayscale employee is putting all of their energies into this initiative, and it's the most important thing that we are doing at the moment. We have shared, and I'll reiterate here with all of you this morning, that there is the potential to have a lawsuit against the SEC, and really considering a variety of options in the event that the approval does not happen for GBTC's conversion. We continue to feel that this is a matter of when, not a matter of if, and that there are now, almost 1 million investor accounts across the US, all 50 states represented, that are engaging on this issue, that are account holders of GBTC. And as we spend time in Washington and advocate for investors, it's really encouraging to see bipartisan support for this type of activity, and believe that we, our regulators, the SEC specifically, will do the right thing here and help protect investors and ultimately fulfill their mandate.
So, Michael, getting back to that discount idea, though, is that we're at it looks like a record, right? 31% discount. Why is that? I mean, why is it ultimately there, right? In your view? Why is GBTC trading at a 31% discount to the Bitcoin that it has? Is it negative market sentiment overall, or is it unique to GBTC?
It's a variety of factors. Ultimately, it's a function of market forces. Today, GBTC has more of the properties of a closed-end structure, given that it has not yet been approved to be an ETF and have the ability to create and redeem shares, which would arbitrage away any differences between where the shares are trading and their net asset value or the value of the underlying Bitcoin it holds. But certainly the combination of market forces, sentiment, the liquidity crunch I spoke about earlier, these are all factors that contribute to the trading price of not just GBTC, but Bitcoin as well.